So that was the idea. Over here, stop loss here, target here, and a bunch of you liked it. You guys like this trade, huh? And now we go to the trade itself. So that whole 5 minutes was a pretty much a review on Euro and what's to come. But let's focus on the main part, which is the trade I took. So again, we look back to cast forward, right? So the previous 3 days highs and lows, and the previous 20-day high and low are a reference point at which liquidity accumulates, either above or below. We know that liquidity accumulates, liquidity pools, they form above highs and below lows, right? And liquidity is accumulated and distributed from above highs to below lows, and vice versa, right? So when thinking about price, you're going to think, where is liquidity being accumulated from, and where is it going to be distributed to? Good? I'm asking you questions like you can respond. It's a recording. I'm just used to the one-on-ones. So, we count back the previous 20 days. If you go through the core content, which I believe is the most complete course regarding the markets that there is and that there ever will be. So, after that course, the 2016 mentorship, there is nothing else that can top it. So that's giving props to the mentor, as he has earned. So in the core content, in the day trading routine, if I'm not mistaken, it's month 9. It's been a long while. So in month 9, in the day trading routine, what does he do? And of course, if it's the wrong month, then don't hold it against me. But I think it's month 9. Anyway, he mentions that from the first steps of opening a day trade is, if you want to be, of course, planned and organized, is checking the calendar for scalpers, because price affects news affects price fluctuations and speed, not the direction. That's already predetermined, right? But the speed at which it goes is delivered through news drivers. So, in that specific episode, and this is something for you to backtest by yourself, you're going to count back to the previous 20 days range. And relative to the previous 20 days range, are we in a premium or are we in a discount? So, we were here at the time. Here, rather. So you 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, and 20. So, at the 20th day, we have these equal highs right here. And before you say to yourself that those are not equal highs, yes, they are. Check this out. If you remove the wicks, look how clean those bodies are. So levels like that, usually they are attacked more often than not. This is not just me parroting ICT. This is actual my observations and experience with what he's saying. So if you don't believe it, go back and check for yourself. Right? So we are at a premium relative to the 20-day high, which is this. We're going to give it a bold black line. All right? This is the 20-day high, which also is a high, low, higher high, and lower low. So order flow, quote unquote, is bearish. We're trending down at the moment. So we've hit this clean level of these bodies. Let's remove everything else. Remove, remove, and remove. That's the 20-day level over here in black, right? We count back a bit more. We go 21, 22, 23, 24, 25, 26. So within the previous 60 data range, we have this rejection block which has not been touched yet. All right? Over here. As you can see, it's not been traded to yet. We barely came close to it, and then we rallied, and here's a little observation. So 20-day high over here. All right, so relative to the 20-day look back period, the data range, we are in a premium. That's the first thing. Second of all, we have a pending we have a liquidity pool that hasn't been traded to yet, which is down there. All right, this rejection block. So anyone who is long right now is hoping that this rejection block is going to hold price higher. They're hoping it's a safe way to put it's a safe place to place a stop loss. How do I know? Because that's how it works. And I would also, before being enlightened by these concepts, thanks to ICT, of course, all props to him. Go watch his YouTube channel, core content, and 2022 mentorship. So that's one way I know, because it's just the way it is, and because it's observed in price action, and because me personally, before I knew these concepts, I would see a long wick and place my stop at the body. So I know it's how they think, it's how the crowds think, and the crowds are always wrong. All right, the crowds are never right. The majority loses. 95% of traders lose money. So, and before a side note on that stat, it's a true stat, and if anyone wants to come and refute it in the DMs, he will simply be blocked. Anyway, so this is the 60-day rejection block, which has not been traded to yet. Right? So we've come shy of the 60-day liquidity pool, which is here. So this is what I'm thinking before I go and post the signal on Twitter, which is what I did. The trade idea, rather. Signal is not a word I would use at the moment. So the trade idea, before I posted on Twitter, I had this in mind. So relative to the 20-day range, we are in a premium. Relative to the, and we're attacking a clean level of these bodies, Look how equal they are. And we have a liquidity pool that hasn't been probed yet. And we have these two equal lows. Look at these clean bodies almost at the same level, right? So the idea was to accumulate the positions from here and unload them down here, right? At the bodies, of course, because when it comes to trading and actual trading, which barely anyone does, obviously, on Twitter, when it comes to actual trading, then a target where you expect a reversal is rejection blocks, right? So this was the framework I had in mind. Now let's dim these and focus on the candles themselves. We go to so we've seen the monthly, the weekly, and the daily. All right, that's step number 1. You check the monthly, you check the weekly, you check the daily, all right? And then you check the data ranges, and then you open, you decide, of course, in the data ranges, are we in a premium or discount? And then we open the weekly profile to find an entry. This is for short-term trading, all right? So these are my 5 steps. You can replay and listen to them again. ICTs are similar, which is seasonality, monthly bias, weekly profile, daily bias, time of day. But I skip seasonality because remove. So we now open the weekly profile with these in mind. We have this in mind, we have this in mind, we have this in mind. All right, so we have inner premium relative to the previous 20, 40, and 60 days. All right. And we're looking for a decline into the rejection block. Okay. Well, I was when I was giving this trade idea out. So 2 hour, which is the time frame I use personally for the weekly profiling. So we have this Sunday open to Friday close. Friday close is here. All right. So we have that level over here, and we are now breaching. We have now broken out. Now this is a common pattern in price action, is a fake, phony, false market structure shift right before a key level. So for example, there's no example better than live price action, but just for illustration purposes, let's assume here is a key level. All right. Got sick. This is a key level, this arrow. All right. This key level is it's not gonna be traded to directly like this, and it goes and repels. No, that would be too easy. Smart money is not that dumb. How's that for a play on words? So we go to we're usually, before hitting a key level, we're going to see some sort of consolidation. All right. Yep, like that. And then we see a false market structure shift, suckering in everyone. This is turtle soup, and then another turtle soup to sucker them in. So you sucker them out of their positions over here. You're suckering them into positions over here. And then one last dig deeper. So anyone who is trying to follow the trend is getting wrecked. And from there, that's the real reversal. And for those of you who remember the Enigma, it was satire, but it has some truth to it. There is truth in comedy. So this is what a key level approach is going to look like. Ideally for me, when I want to find an entry, right? So it's not going to hit at once. It's going to go through a consolidation, turtle soup, fake market structure shift, and then a real violent, clear displacement lower, which is a Judas, and then a displacement higher. All right? So this is what I was expecting to happen over here. So with the key levels down here, which has not been traded to yet, it's not been probed yet. We're consolidating, turtle soup over here, which was tradable. Very good trade, which I did not take. I'm not going to pretend like I'm some genius. I did try to enter on the way up here. I got a portion of that. But anyway, consolidation, consolidation, turtle soup, market structure shift. Everyone's bullish. Everyone and their mama are buying up here. But look what happened. Weekly profile, Sunday gap. It opens with a gap to the upside. So instantly when that happens, I'm looking for a Judas. So opening price is here, right around here, 1.069 more or less. So when the Sunday price is opening to the upside, I'm expecting a Judas. Well, is it instant? Could be. Could it take a while? Like, could it really shoot up? Because sometimes you get a Judas where it opens and it shoots up non-stop, wrecking everyone who was long, wrecking everyone who was short, and not allowing new people to participate in the movement. Right? So over here we have Judas to the upside. We have a consolidation during Monday and Tuesday. Now that's what you want to see because consolidations birth expansions, and expansions are followed by consolidations. Right? As I've mentioned many times on my Twitter. So I'm gonna have to end this pretty soon because I have something to do. Propulsion block right here. No, vacuum block for those who even remember what one is. They're not that common, or at least I don't use them that much. So vacuum block, turtle soup, fly, consolidation, and then on Tuesday during the Asian session, we had a manipulation. We had a move to the upside. So consolidation, accumulation, manipulation on Tuesday during the Asian session. So we can expect that to be followed by an expansion to the downside, and that is what I had in mind. All right, so my entry was right here. I'll be posting a picture of the execution after this video. But that was the thought process during the whole, during all this. All right. So to recap about the higher time frame PD raise and where we are relative to the higher time frame. Number one, 20-day premium. Number two, 60-day rejection block liquidity pool, which has not been probed yet, which we're expecting to be attacked. And number 3, those equal highs, 2 equal lows. So we're accumulating from here, and we are distributing the same way smart money does, because we're emulating smart money. We're accumulating here and distributing down here. What's here? Go back in the video and you'll see. So sell here, and then we see a violent movement. Now when you see violent price movements like this, which are straight down or straight up, then that is usually a false move. All right. So although I would have liked it to continue down to 1.04800, which is the ultimate target for euro, if you see it trading down there, then don't be surprised. So although I would have liked to see it trade down here, but when I saw this violent decline in one straight line, that rhymes, a violent decline in one straight line into this low, and it didn't even close below it. It just stabbed right into it. All right. That's where I said, it might be time to abandon the ship right now. And clearly, that was the correct decision. You got the attack, the turtle soup of the previous week's low, displacement for our FVG, which can be reasonably expected to hold as a buy, and you can target at least 50% of the price swing, because when you see this sharp price moves, then usually, here's another one. These sharp price moves will usually be retraced at least by 50%, right? So that was the idea of the trade. Now, execution, which is more important. I gave out the trade over here. All right, I gave it out, I think, almost here. Let's remove everything and now focus on the 3 most important things to consider when you are executing a trade, which is the chart should have nothing. It should be naked of anything except 3 things: the entry, the stop loss, and the target. So this was what it looked like. The stop loss is going to be this intermediate term high, which I expect to hold at least until liquidity is taken out. I saw a bunch of you who follow me along closely also do the same thing. So good job, you. You know who you are. You go here, you go here. Stop loss here. All right. Target 1 is this previous week's low, which is also a market maker sell model lookalike. Accumulation, smart money reversal, and boom. And the other one was down here, of course, the other target. So TP1 was here, and target 2 was here. A partial, of course, at the low that purged the high. So that was the trade idea. And as I've said before, I'm thinking in probabilities. I don't care what price does. Why? Because simply I don't control price. I can read it pretty accurately, as you've seen for the past couple of months, but I don't care. It's all about risk to reward and percentage gain / loss. That's all that matters. So in this situation, premium 20-day, equal highs, liquidity pool that hasn't been probed yet down there, and the same pattern. Now look at the pattern where it comes in. The pattern comes in after all of that is said and done. Then the pattern comes in, and we can discuss the pattern, which is the key level. If you remember, I'm not drawing anything, but you can just imagine. Key level, consolidation, fake, real. Right? Let's just redraw it for completeness sake. So this is the pattern, and the pattern comes in after everything's considered. All right? Key level is this down here in bold. And that's going to make the path bold too. For God's sake. Oh, Great. Consolidation, 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 and then a violent, either slightly in the key level or digs into the key level. So fake market structure shift, violent turtle soup slash Judas slash liquidity purge slash spring, or whatever you want to call it. Yeah, you have to understand the idea. The naming doesn't matter. And then a real one, displacement. Now, when this one happens, no one believes it's real, but it's a real one. That's when you know when it's real. When you see someone on Twitter posting saying it's going to go down, guaranteed 100%. I've seen that happen a couple of times where, well, more than a couple of times where the real breakout finally occurs, and then some goofball comes and guarantees his audience that it's going to go back down. That's when I go all in. So, all that aside, the trade idea was this. I believe it was here. Plus minus some pips. It was like this. With the arrow. Right? And the eye. And it looks nice in... now, the reason I entered over here, around here, was because of this, the possibility that it was going to turtle soup this one and just decline from Monday. So to be on the safe side, you're going to risk a small Judas here, or an extra layer, an extra degree of probing in the purge. But the stop loss is there. The invalidation of the idea is clear. All right. So that was the idea. Over here, stop loss here, target here, and a bunch of you liked it. You guys liked this trade, huh? And I must admit, it was flashy. It was a good one. So like this 1 to, I believe it was 1 to 4 risk to reward. It was 200 pips in one day. Called live on Twitter, if I may say so. And that's all there is for this video. The execution will be posted after this video directly. And I wish you all good luck and good trading. And see you in the next one.